So the CMHC said Canada's housing market right now is highly vulnerable to correction. What should we be looking at? Is there something we worry about? Are they just being a little bit alarmist right now? That's what we're going to cover in today's video. My name is John Pasalis, president at Realosophy Realty. You can catch all my latest writings on Toronto's housing market at movesmartly.com. If you find this video helpful, please hit the like button and subscribe to stay up to date on all my latest videos. So CMHC released their housing market assessment of Canada and of the big cities across Canada. And they basically flagged it as being very highly vulnerable to a potential correction right now. So, are they being alarmist? I mean, we for those of you who don't recall, CMHC came out with one of the most pessimistic forecasts at the start of the pandemic, predicting that house prices would fall between 9 and 18%. And they were very confident in that forecast. And ultimately, of course, prices, not only did they not fall, they actually surged by as much as 30% in many Canadian cities across the country. So is there concern to be, is there cause to be concerned right now? And really, I feel like CMHC does have cause to be a little bit more concerned right now than was warranted even a year and a half ago. And the cause is just by looking at historical episodes of the types of trends we've seen now. And interestingly enough, the same week, I believe, University of Chicago economist and co-author of the book House of Debt, Sufi, had posted a couple of tweets that I thought were relevant and kind of spoke back to kind of the concerns that CMHC was highlighting. And he wrote that a robust finding in the macro finance literature is that a large rise in property prices and the associated debt predicts a decline in economic activity, a rise in the probability of financial crises, and a crash in bank equity prices. And after we wrote House of Debt, people used to say, what about China? And I used to say, I don't know much about China, but I know that historical episodes of strong house price and debt growth are usually followed by bad things. So, of course, Canada and Toronto in particular, of course, has experienced a period of very, very high house price growth and high debt growth, which, if you believe historical trends, which I tend to, makes our economy more vulnerable. And does that mean prices are going to fall tomorrow? I mean, probably not. I don't see anything that's can cool the housing market, at least not in the short term. The market is so far out of balance. That there's just not a lot of inventory. Demand's still quite strong. And the reality is if the market started to slow down, there's still so much stimulus available, from the central bank, from the federal government to kind of keep the housing market going, especially as we're still recovering from this pandemic. So I personally don't see any adjustment in the short term, but the reality is, and this is the challenge when we're looking at historical trends, we never know when the vulnerability might materialize in the housing market. We don't know what the trigger is going to be. But again, I mean, I think there are a lot of Canadians and Torontonians who seem to believe that we're immune to these trends in Toronto, that history doesn't matter, we're special, we're world class, nobody else is. We just can't build enough homes. And because we can't build enough homes, prices can only go one way, and that's straight up. I mean, I don't tend to subscribe to that belief. I believe historical trends do certainly repeat themselves, obviously not in the same way, and we don't know when. So, I mean, I feel like it's just more prudent to keep an eye on the dynamics of the market. That way, whether we're homeowners or buyers or potentially selling or investors, we're looking for potential red flags in the future that might influence our buying or selling decisions. And I feel that that's a way better approach than just assuming prices are going to hit the moon. I think it's just more prudent to just kind of, protect yourself and be aware of all of the trends that are impacting the market and looking for red flags in the future. In a future video, I'll probably highlight some of the things, at least, that I keep an eye on and I'm keeping an eye on when we think about, potential risks to the housing market and what might lead to a slowdown in the future. But again, I don't expect anything in the short term. What the market's going to look like 2 to 3 years from now is, of course, anyone's guess. But, I think, again, it's important to be looking at potential red flags because, again, these could potentially impact our buying and selling decisions in the future. I hope that made sense. If you have any questions, please post your comments below or send me an email at askjohn@movesmartly.com.